satisfy the entrepreneurial spirit, people do business. Another student will come up with an answer to provide goods and services and thereby satisfy the needs of the people, people do business. Another view will be to contribute to society, to generate employment opportunities, to satisfy your own ego, like you don't wish to work under somebody, so you float your own business. We can see a lot of answers coming up this way, and each and every answer is right in their own spirit. But when I come to an accounting class, what can be a more appropriate answer? People do business to make money. Yeah, to make money, or in formal terms, to make profits. Now the next question is, what do you mean by the term profits? Yeah, as an explanation we can say profits are nothing but excess of income over expenses. But I put it in a very simple, straightforward equation. Profits are nothing but revenues minus expenses. Assume in an entire year we have only one income, say 10 lakhs rupees, and only one expense, say 7 lakhs rupees. What is the profit we make? It's 3 lakhs. Can we remember this? Definitely. But very unfortunately, in any business, we don't just have only one income, one expense in a year, and it's not done by just one person and doesn't happen in just one place. In a business, there are n number of revenues and expenses that happen over a year, and this happens over different geographical locations, and that too executed by a number of people. So the question is, can we remember all this? Is it humanly possible? When you say no, then don't we require a system which will take care of all this data? We need a system which should create this data, hold this data, and help us whenever we require it, particularly for decision-making purposes. And that is where we have the system called accounting in place. And can you now understand the relevance of accounting? Having understood the relevance of accounting, now we will move on to the accounting definition. Let me just read that for you. Accounting is an art of recording, classifying, and summarizing in a significant manner, and in terms of money, transactions and events which are in part at least of a financial character, and interpreting the results thereof. This is the definition which we have to clearly explain the whole functions or the role of accounting in any business. Rather than trying to understand this definition in full, it is better if we break this into different parts, try to understand them individually, and then if we come to the definition, the whole or the holistic part of it can be well understood. So let me go for the individual parts of this definition now, which I will call as functions of accounting. So what are the functions of accounting then? There are 5 functions which we can pick up from this definition. 1. Identifying. 2. Recording. 3. Classifying. 4. Summarizing. And 5. Interpreting. We will take up one by one. Let us try to understand that now. Starting from identification. When you say identifying, it is nothing but identifying the financial transactions and the accounts involved in it. The whole business will be full of transactions. When I say transactions, I mean a give and take. Throughout the day, throughout the period, we will find a lot of transactions happening in a business. But accountants are not bothered about all the transactions. We need to identify what are those transactions that create an impact on the financial position of the business. And those transactions I call as financial transactions. In some books, they even call it as events. So out of all the transactions that happen, we need to identify only financial transactions, that which creates an impact on the financial position of the business. Let me give an example. Assume a probable customer walks into your showroom, checks up all the products that you have displayed, and inquires about the price, the credit details, or any discount offers that you give, and so on. And he walks away. Is this a transaction? Yes, there is a give and take. You give some information, he has taken some information. Definitely this is a transaction. But the question now is it a financial transaction? No way. Why? Because of this, there is no impact on the financial position of the business. There is no increase or decrease in the financial position of the business just because of this transaction. So I would call this as a transaction, but not a financial transaction. But assume the same guy comes back the next day and he places a huge order for say 10 lakhs rupees and immediately gets all the goods from you, pays you money, and then he walks away. This is a financial transaction where because of this activity there is an impact on the financial position of the business. You have done some sales worth 10 lakhs rupees. Probably it has created some sort of an income for you, and it has influenced or created an impact on your financial position. That's what we call as a financial transaction or an event. So coming again, identifying is nothing but identifying the financial transactions and what are the accounts involved in it. Having identified the financial transactions, our next step is to record the same. So recording the identified financial transactions in the books of accounts as per the said rules. If I ask, say, a group of 50 students to record the transactions, everyone will find their own way of recording. Everyone may be right in the way they record, but unfortunately at the end, if I want to compare the data created by all these 50 students, it will be next to impossible, because everyone would have recorded in their own way, and it will be almost difficult for us to compare the data. Similarly, they may not have a consistency in preparing this period after period. So, to make comparisons easy, to have consistency in what we are doing, it is better all of us follow the same set of rules. So, in recording, more than creating data, it is the set of rules with which we create is more important. So now, having recorded the transaction, what is our next step? Let us classify the transactions under various heads now. Assume morning 9 o'clock you pay 200 rupees auto conveyance. Is it a financial transaction? Yes. Have you recorded this? Definitely. Now the next step is, under the head auto conveyance, note down 200 rupees. So you are creating a head and under which you are noting down the data. That is what classifying is. Say at 11 o'clock you pay 10,000 rupees salary to your assistant. Is it a financial transaction? Yes. Have you recorded this? Yes. Now under the head, assistant's salary, record 10,000 rupees. So for every expense and for every income, create a head and under that you make a note, and that is what basically classifying is. So you can find what are the various heads through which you have received your income, what are the various heads through which you have spent or you have done your expenses. So having done this, we will move to the next one, that is summarizing. At the end of the period, summarizing all the accounts. So pick up every head under which you have noted the data, find the total of each and every head, so that over a period of time you will know how much you have spent for auto conveyance, how much you have spent for salary, how much you have spent for, say, stationery expenses. Similarly, how much you have earned via various means. So summarizing gives an ultimate total for each and every head at the end of the period. And now comes the real activity. Having done so many things, have we made profits or losses? Let us check up that in the next one, interpreting. So interpreting is nothing but grouping all the incomes and expenses to know whether the business has made profits or losses. We know there are so many heads through which we have earned, and there are so many heads through which we have spent. Let us group all this income to one side, group all expenses to one side. That income minus expenses will tell you, have we made profits or losses? If income is more than expense, yes, we have made profit, otherwise loss. In some of the books, they go one more step ahead. Rather than just interpreting, have we made profits or losses, can we question them? Meaning, can we do some analysis? How come we got only so much of profits? How come we suffered loss? Why our profits are lesser than our competitors? How come that my competitors have not made so much of losses when I have made? So question the numbers. That is where your analysis comes into picture. So, having said functions of accounting, we have made very clear where the process starts and where it ends. Begins with identifying, ends with interpreting.